guys, welcome back to a brand new video. I'm RexFinance, of course, and today we're going to talk about a company in the EV and clean energy industry that I don't think is getting near enough attention. Now, moving electric is undisputedly the future for all types of vehicles. And what that's led to is every single electric vehicle or clean energy company being noticed on the stock market, and all of the stock prices have just risen like crazy over the past few months. However, like I said, there's one in particular that I'm going to talk about today that I don't think has gotten near enough attention from investors. And that company is FLUX Power. I've talked about them on my channel a couple times in the past, but there's a reason that I'm going to talk about them today. So please stay tuned for the whole video because there's a whole lot of money to be made in this company. So FLUX Power manufactures lithium-ion batteries for all classes of forklifts, airport ground support equipment, and even electric vehicle charging stations. So obviously the whole forklift part doesn't sound too exciting, which was part of the reason I think this company hasn't gotten so much attention, because it's not a flashy investment. You're not investing in a company that's going to be manufacturing electric cars. That doesn't mean that there's not a lot of money to be made in other companies in the clean energy and electric vehicle sectors that just aren't being noticed. Now, before we go forward, I just have to say I am not a financial advisor, so don't blindly invest in a stock I talk about on my channel. Please at least read through the latest 10K as well as the investor presentation for all companies I talk about on my channel before making a buying decision on the stock. Now, the second thing, and I'm going to make this quick for you guys, I'm giving away $1,000 as well as free RexFinance merchandise like this shirt that I have on here, or this hat, and all of that is being given away via a virtual stock market challenge. This is not your own money. This is everybody gets $100,000 virtually to invest. Whoever has the highest return gets one of the prizes. Now, the grand prize is $1,000, which first place will get, and second and third place will get the free merchandise. And personally, I would try and get second or third place because this merchandise is by far the better prize. So I'm doing this competition because Christmas is right around the corner. I want to give back to you guys who have supported my channel, and I really, really appreciate that. So if you want information on how to join that free competition, go to my latest video. There will be an I in the top right-hand corner, as well as a link down in the description below that explains how to join the competition. So back to the video. Now, the last thing I want to mention, I don't normally mention this at the beginning of my videos, but please, if you are new or returning and not yet subscribed, if that subscribe button is not grayed out down below, hit the subscribe button for me because over half of my audience is not yet subscribed. So you may be wondering, why FLUX Power? I said it myself, this is a relatively boring investment compared to the other EV companies you can be investing in. But the honest truth is, FLUX Power's market is relatively large with very little competition. Now, in comparison, the electric car market is massive in comparison to the forklift or lift truck market that FLUX Power is a part of. But the difference is that electric car market has many competitors, many slices of the pie, many companies trying to split that market share many different ways. That leaves little room for growth because there's going to be so many different companies splitting the revenue share. And I genuinely think FLUX Power, this stock price is going to double over the next 12 months if things go right. Now, make sure you watch this entire video because I've done some due diligence and I made it really easy for you guys to interpret and use for your own research. Now, on further note, it's kind of a big deal for me to say that I think this stock is going to double over the next 12 months because when I originally bought into FLUX Power, it was at $5 per share, and as we can see, it's doubled from that share price in the past to over $12 per share. Now, they recently raised money which has shrunk the share price down, but it's really providing a very good buying opportunity, which is why I'm choosing to present this company to the channel yet again today. I even bought shares in several of my investing accounts just recently at prices higher than it is at today. Now, if we look at Yahoo Finance to the left on the screen, we can see that this company only has 12 million shares outstanding, and the average volume is only around 200,000 over the last 10 trading days. That's where my point that this is an undiscovered company comes in. If this company was discovered, that average volume every single day would be closer to 1 million shares. But with only 12 million shares outstanding, when this company does gain traction, when new investors do set sight on this company, the share price can absolutely explode. There are several ideas I have on how to get this company noticed by bigger investors and institutions out there, and I'll go through those reasons later on in the video. So now let's talk about the valuation of this company and why I really think it will double over the next 12 months. And let's start off with the addressable market. And the addressable market annually is around $2.5 billion for electric lift trucks. The Industrial Truck Association estimates that around 242,000 lift trucks were sold in North America in 2019. I can only figure that that number is only going to increase as time goes on and more warehouses pop up around the country. There is increasing demand as every day goes by for same-day delivery or next-day delivery. When somebody orders something online, they want to receive that product as soon as possible. And the only way that companies like Amazon can make that happen is by placing more and more warehouses around the country and using predictive analysis of spending behavior in different geographical locations. Along with all these warehouses popping up left and right around the country, there's been a major push to electrify lift trucks and forklifts. And the reason for that is that it's really a health hazard for any employees because the fumes from combustion engine forklifts just get trapped under the ceiling. So now let's tie that all together. The reason why that's a big deal is because this $2.5 billion annual market is split between two competitors mainly. One of them is FLUX Power, the other is Plug Power. They're really the only legitimate players in this industry that I have personally found, and I've done hours of research on this company. So now you may be wondering why I'm choosing not to present on Plug Power, and I chose FLUX Power. And the reason for that is Plug Power's solution really only makes sense for the biggest of companies with the biggest of warehouses. Their solution only makes sense for the Walmarts and the Amazons of the world. However, FLUX Power's addressable market and niche in this industry is for everybody else. Your PepsiCo, your Coca-Colas, your Delta Airlines, your Frito-Lays, your Kraft Heinz, companies like that are the existing customers of FLUX Power already. Most people know that Plug Power is focused on fuel cell technology or hydrogen. And the fuel cell technology in forklifts and lift trucks is a very high capital investment, meaning it's a very high upfront cost. It's also tailored for 5-minute charging in warehouses with 200 or more forklifts. In addition to that, kind of on a funny note, fuel cells actually still need lithium in order to operate. And what FLUX Power manufactures is lithium-ion batteries. Now, I'm not going to talk about the other two power sources for this equipment because it's pretty well known that the lithium-ion and fuel cell technologies are the ones that make the most sense here. Lithium-ion batteries make sense for warehouses for companies that aren't Amazon or Walmart. So that's very, very broad, but that's also a good thing. There are only 5 main competitors in this lithium-ion market, and only one has UL listings. All of FLUX Power's batteries are UL listed. And the fact that warehouses almost require electric batteries and forklifts so that fumes don't get trapped underneath the ceilings of the warehouses just means massive potential for FLUX Power. As I've already mentioned, they have a very broad customer base that goes along with their target market. Their solutions make sense for many industries. I already highlighted PepsiCo, Coca-Cola, Budweiser, Frito-Lay, Kraft Heinz, Caterpillar, AutoZone, Delta Airlines. Really, any company in any industry could benefit from FLUX Power's technology. And in a growth company that isn't yet recognized and the market cap is pretty small. This is technically a penny stock, even though shares are over $9 per share. It only has a $100 million market cap. But for a company that has a total addressable market this big with customers that are big names like the ones I've already laid out, that is huge going forward. So moving on, in FLUX Power's most recent quarterly results, they announced that they had 135% revenue growth year over year. And that's really something that I look for in investments is revenue growing at triple-digit rates. Now they also increased their gross margin to 19.4%, and that is up from 6.1% a year ago. And they did all of this through a pandemic. When the chaos of this pandemic ceases to exist, finally, I hope someday, really, they could blow the top off of these revenue numbers and their revenue numbers could grow like you've never seen before. This most recent quarterly report reflected a quarter that is a seasonably low revenue, low volume quarter for FLUX Power. FLUX's management team has also chosen to keep paying off their high debt load, which is something that I looked for when I initially invested in this company. And they've continued to do this. Every single quarter, they've reduced that debt, which reduces the interest expense, and eventually they will become profitable as that interest expense squashes down to near zero. And again, when I first bought those 1,000 shares, I was really spooked by that debt number. But as every quarter passes by, the risk of this investment drops drastically. Their management team has continued to fulfill all the promises they've made to shareholders about reducing that debt load, growing their gross margin, increasing their sales, growing out their product pipeline. And really, if they continue to do all of those things, there is zero reason the market cap shouldn't be $200 million within 12 months. And when you're talking about an investment that could double your money in 12 months, that is ridiculous return. Keep in mind, the average market return for any given year is 8 to 12%. 100% return on investment speaks for itself, and I am standing by my word. If they continue to execute perfectly like they have been ever since I've been invested, the share price will be $20 or higher 12 months from today. You can mark my words. So now let's move on to why I think FLUX Power is undiscovered. I personally think lots of it has to do with this not being a flashy investment. Who wants to invest in a forklift company? But they have other business segments that go along with electrifying forklifts, such as electrifying warehouse robotics, supplying batteries to BEEM Global or Envision Solar for all of their solar-powered charging stations. Eventually, big money, smart money institutions will catch on to this trend, and the share price will reflect that. The price of this company will be where it should be. It should not be a $100 million company where it stands today, in my personal opinion. Lots of small cap growth companies have at least 5 years of revenue priced into their market cap. Just last year, FLUX Power did about $20 million in revenue. And that revenue number has been growing at least 80% every single quarter year over year. So it only makes sense that this company is undervalued where it's at today, but in 12 months, it could get scary. In my opinion, the management team needs to go on road shows, investor presentations, and really just get their name out there, because that's really the only thing that's stopping this company from gaining in share price. They need bigger investors. They need smarter money. They need institutional investors to put eyes on this company and invest in what they're doing, because they've laid out the groundwork. The revenue growth is there. The margins are there. The debt reduction is there. It's a very promising company going forward. They just don't have the eyeballs on them right now. But I will say, bottom line, if FLUX Power continues to do what it's been doing, the share price will take care of itself and it will catch up to where it should be valued at. And I'll go back to my point earlier. I actually bought shares of this company in several of my accounts at a higher price than it's at today. And that's saying something, because when I first bought shares of this company, it was only $5 per share. I would not be buying more shares of this company if I did not truly believe in what I'm saying on camera right now. Now let's talk about their other exciting business segments. And let's first start with this warehouse robotics. You've already heard my tune on warehouses going forward. More of them are popping up left and right every single month, every single year that goes by. The bottom line is that warehouses need to be electric for safety reasons. And warehouse robotics are only going to become more and more popular, and they're going to be in demand more and more as time goes on. And the fact that FLUX Power has its foot in the door in this industry early is big. By being in the market early, they're going to develop relationships and partnerships and have customers that others that come later on won't have. Next, let's talk about them supplying batteries for BEEM Global, formerly Envision Solar International. They're supplying their lithium-ion battery packs for all of their solar EV charging stations. It's not a secret that EV charging is a big industry going forward. And again, the fact that FLUX Power has its foot in the door early and has a direct relationship with a company that's building this infrastructure out is big going forward. If electric vehicles truly are adopted like we think they will be, there are going to have to be electric vehicle charging stations everywhere around the country, everywhere around the world. And if FLUX Power can continue to ink deals like this one with BEEM Global going forward, the sky is the limit. This is just another revenue stream that they can grow on. Their other exciting business segment is with airport ground support equipment, otherwise known as GSE. Electrifying ground support equipment just makes sense. And they already have a relationship with Delta Airlines as well as other airlines out there, but we're going to focus primarily on Delta Airlines. Delta Airlines has been known to being on the leading edge of the cutting edge of adopting new technology at airports and inside of their airlines. And generally, if Delta Airlines adopts a new technology and likes it, all of the other airlines follow suit and adopt that technology. And so far, Delta Airlines has loved FLUX Power's lithium-ion battery packs. However, I will say this business segment probably has slowed as of late because of the pandemic. Buying batteries is generally a higher upfront cost, and the bottom line is airlines are not making money currently. But when they do start making money again, I think this business segment will continue to advance and grow further. It's a high upfront cost, but for long-term cash savings. And if lithium-ion batteries were already adopted for airlines, they would be saving a lot of cash in times like these. So I hope they're learning their lesson and they will adopt this electric technology as soon as possible. So to end things off, let's talk a little bit about what I want to see from FLUX Power going forward. Obviously, I want to see their gross margin continue to expand. If we can get over that 20% gross margin hump, I would be a very happy investor, but if we can get even closer to 25%, that would be huge. Also, I want to see them continue to grow their revenues at least over 75% every quarter, year over year. I also want to see them continue to reduce their debt and get rid of all of their debt instruments that are high interest bearing. Last but not least, I want the management team to start getting their name out there to bigger investors. They don't go on road shows. They don't have investor presentations too often, but if they start doing that, the sky is the limit. And if they do all those things that I just mentioned, I don't see a reason their market cap won't double over the coming 12 months. So this isn't really a flashy investment, but it doesn't have to be flashy. They have a relatively large total addressable market, and they really only have one other competitor, and their solutions only make sense for one or two companies out there in the entire world. FLUX Power has all of these smaller companies to work with, like the Frito-Lays, like the Kraft Heinz. I recently bought more shares of FLUX Power, and I think you should too. Again, I'm not a financial advisor, so don't blindly follow what I'm telling you on the screen right now. At least read through FLUX Power's most recent 10K, as well as reading through their investor presentation like I briefly did in today's video. With that, be sure you join that free competition so you can hopefully win $1,000. But, I think the better prize is the RexFinance merchandise. So with that, if you guys enjoyed this video, leave a like down below. Also, let me know how many shares and at what price you own FLUX Power. With that, have a great rest of your day. I'll be back tomorrow with a brand new video. Peace out.